Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, and see what is going on. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, I dive deep into all this stuff looking for investment opportunities. I do use technical analysis. I do use fundamental analysis to some degree, sector valuations, and I dive in there and share my findings with everyone in the community. And then I try to assemble a portfolio. I do it right in front of you guys. I'm actually sharing 100% transparency with one of my accounts, my Roth 401k. I started it last year, late 2024, and I'm showing every single purchase and every single buy point and sharing the portfolio with everyone in the community. So 100% transparency there. You can see how I'm adding into positions. You can see how much I'm buying, my portfolio allocations, not saying that you should have the same exact allocations, but I'm pretty open with what I'm doing. And then I also share my purchases and other portfolios on the website. If that interests you, if you want to join, use special as a coupon code, save yourself some money. You can get 50% off the first month only on the monthly membership and a larger discount on the yearly if you do want to switch to a monthly to a yearly membership. So HFI research says natural gas is just the beginning. The current short squeeze that we are seeing today is just a tease for what's to come later in natural gas. And I agree. Guys, we have a wall of demand coming. It is bigger than anything that I've ever seen in history for energy demand. And I'm not talking just artificial intelligence. I'm talking LNG takeaway capacity. Artificial intelligence is in there. If these tariffs are successful, if they are, I'm not saying they are, but if they are, well, we better start building more manufacturing facilities. And more manufacturing facilities needs electricity. It needs energy. If we're going to build more mines in this world, if we're going to mine at lower ore grades, that all means more energy. Everything we need is more energy. I think energy is the best investment idea uh, for the next 10 years. Another thing that most people don't think about, I do, but most others don't. When Lynn Alden says nothing stops this train, that what that means is that we have more money entering the system, and we can't stop the money entering the system by using interest rates. As interest rates go up, your interest expense goes up on the debt, which means you're pumping more money into the system. More money in the system is demand for energy. If you guys can wrap your head around that. So nothing stops this train means that nothing stops the demand for energy. It is nonstop coming, coming, coming. And that's one of the most inflation sensitive assets is energy. And I have a feeling that we're going to see a very big move in energy in general, especially from where we are today. High Heat says QE is coming. Silver, oil remain the most important, cheapest strategic commodities. Silver's breaking out. Oil is next. Yes. Yes. And you don't have to be right 100% of the time. With oil and silver, you only need to be right within a window. You won't be perfect. And if you can get the majority of the gain for oil or silver, that's all you need. That's all you need. Doesn't matter if you're a year or 2 years early. The moves will be so big and so extreme in both of those assets. You only need to catch one of them. You don't have to catch all of them, but if you catch it, perfect. And if you catch the majority of the move, even better. I know a lot of people talk about, they might have a portfolio, and when you set up a portfolio, just so you know the game, you won't win on everything in the portfolio. But what you want to do is you want to win on some of the things in the portfolio so big that it just decimates. That's called asymmetry. Asymmetry means that you have some investments pulling the entire portfolio and just going to ludicrous levels. That requires someone to hold on to it. You got to be able to hold on. If you sell out and try doing a trader mentality, it doesn't work that well. Some people will say, I'm up 2, 3, 400%. I think I should sell. Well, you can never go up 3 or 4,000% if you're selling at 300%. So I think more people need to understand the the gravity of the situations that we are in with these assets, how cheap they are, understand the market conditions that we're in, and where money is going to continue to flow into these assets because of the market conditions. And focus your efforts all on that. You can also focus your efforts on the vehicles, the stocks or companies that you are interested in. But what's more important is what's causing money to flow into the sectors that we are in. And we are at the very, very beginning of this. We can look at the silver to gold ratio, the oil to gold ratio, oil to financial assets, or silver to financial assets. Guys, when these things all start to break, the world's going to look different. It's going to feel different. It's going to taste different. You will see it. I guarantee you guys are already feeling it. Today feels different than a decade ago. The pricing of things moving on up, how hard it is for people to, younger people to rent an apartment, to buy a house, to do all these things. Things are different. It's changed over the past 10, 20 years. It's going to continue and it's going to get worse from an affordability standpoint, from all of this. And I think we're at the beginning of a very big move of commodities, a very big move in precious metals, if you consider that commodities. And I think we're going to see interest rates continue higher. And that is a driver of money being, it's going to be forced out of other sectors into people, into things that people need, not what they want, but what they need: food, energy, shelter. Solar 8 King says solar is surging. Elon says it's the future. Guess what solar can't surge without? Silver. No silver, no solar boom. Stack accordingly. And solar is 100% of energy long term. Well, I think what people are confusing here, solar, so everything comes from solar. Fossil fuels, it came from solar. So what he's saying is not very profound. It's kind of obvious. Everything that we have today, all energy, comes from the sun. The sun, which provided life on this earth, that life passes away and becomes a fossil fuel. Plants, uh, carbon-based animals like ourselves, or I got a little squirrel in the backyard running around there, but we pass away, and then and leaves and all sorts of stuff become oil over time, a very long period of time, or coal, or whatever it is, whatever it turns into: coal, oil, natural gas. And that's nature's batteries. Nature's batteries are coal, oil, natural gas. So what we're doing is we're just using the sunlight, gathered sunlight through uh, vegetation and stuff that's been preserved over the years and cooked and whatever, and then we extract it. So it's Earth's batteries of dead things. So yes, everything is solar, and fossil fuels are just batteries of solar. Here's gold versus the consumer price index. You guys have seen this before. We had a consolidation here. Now keep in mind, gold was not freely traded in this area back here. When it was freely traded, we had a massive surge higher in the 70s all the way to 1980. We had another large consolidation from 1980 to 2020. I think this broke out 23 or 24. And now we're moving higher, similarly to the 1970s. This is a big deal. It is a representation of the market condition that we're in. So we have that breakout. Now, what I like to do is I like to figure out why. Why are we having that breakout? What would be a good logical explanation for the breakout of gold versus the consumer price index? Why didn't it really do it before that? I mean, we did get one pretty good from 2000 all the way to 2011, but that wasn't a breakout. That was still in a big consolidation, hence the big cup and handle and then the cup and handle. It's the dream within a dream within, and then you get another small dream over here as you break out of the handle portion. So we've got different time frames and we're breaking all time frames. That is the most bullish situation that you can be in. It's a short-term breakout here on a larger cup and handle pattern, on a larger cup and handle pattern. So when we break this handle over here, you just broke the larger, bigger pattern. So a small pattern breaks the medium pattern, which breaks the big pattern, and then it's all running from there. Now, what I did and what I think is a driver of this is the cup and handle pattern that we have that's all aligned over here. That was due to a declining interest rate environment. It takes a little bit of time for people to respond over here as money rotates differently. That didn't work as well back here because gold was not freely traded. It would have been going higher back here. We can also visually see that silver was going up with interest rates during this entire time frame. So we broke out because it was being held down, it was pent up and broke out when it was freely traded and ran. You can also look at gold to M2 money supply. It was fairly valued in 1980. Right now, we've reset all of those metrics. So we've reset the gold to M2. Down here is what it's like up here. So we've got a huge runway for gold to run against the M2 money supply, a huge runway for gold to outperform financial assets. It's all set up here. And if interest rates, which we've broken out of the 40-year downtrend, if they continue to go up, I think gold's just gonna keep going. Same with silver. I mean, these things are gonna rip. I mean, they are going to rip. So keep that in mind. CEO says Eric Sprott called out the obscene silver short position in the COMEX, 850 million ounces. Meanwhile, EV tech is advancing fast. China could have a car with a 1,000-kilometer range with a 5-minute charge. Demand will explode. We've had a 200 million an ounce silver shortfall every year for 4 years. Where is this stuff coming from, folks? Watch the short Full Crash Labs interview with Eric Sprott. Yeah, sounds like a bullish formation here. But again, I'm going to go back to that interest rates. If those interest rates, that's going to be a huge driver behind all this. So all of this here, yes, that's all great, but you're also going to get financial demand for it. This is going to be a 1-2 punch. It's financial demand, and on top of it, industrial demand. Here's some more silver. Well, these are precious metal miners versus ETF ratios. So we have SILJ versus silver. This is a big deal. We're starting to break the downtrend line. I posted this a while back. I put this little half dome there. Once we break out, we're going to be running full speed. It's coming. I'm already positioned. I've been positioning for a little while in here. This whole area down here, I've been positioning for this potential move here. This is SILJ versus GDX. Now, GDX generally runs first. We're still squeezing in this falling wedge pattern. We're at the bottom of the pattern. My opinion, I'd be looking at SILJ or companies that compose of it. That is where I would be looking. And yes, got some ideas on the website. We've been investing in those ideas. Some of the companies coming off their bottom are up a couple 100%. The junior companies that are a little bit more speculative. We've got other ones that are also up a couple 100% that are producers, mid-cap producers that can grow production pretty aggressively. Those things have already run, but some of the junior silver companies are still down there at this moment, and they could run at any second. So get ready, it's coming. We've got GDX versus gold, and again, we've got a long runway for GDX to outperform gold in the future here, a very long runway for valuation. And this is GDXJ versus gold. And again, we are at incredibly low areas with a huge runway ahead of us. So some of these companies could be up a few 100% right now, and we still have a runway of a lifetime ahead of us. So I am not going to be too quick to sell. I think this is going to last for a long time. And these transitions between financial assets to hard assets sometimes can take some time. It's not going to be immediate. This is not a swipe left, swipe right type of move. This is probably going to go up for years, maybe even decades. That's how big the move is coming. And those who can just sit and do nothing, I think will benefit massively. And I'm not talking about hundreds of percent moves. I think it will be in the thousands. And what's hard is when you're an investor, you have to envision what the future is, what's coming, and then take action today and just sit and do nothing for a very long period of time. You got to have that. It's not really conviction, it's the ability to see the future. I don't know if that's called conviction. Conviction means that you know that you're right, you bought good companies and all that. That's what I consider conviction. It's like the ability to see the future before the future plays itself out. And I'm not saying that you can see it with 100% certainty. What you're seeing is you're seeing valuation mismatches. You're seeing a cycle that's turning, whether it's interest rates or something. Then you can get your head and wrap around your head how big the cycle will be. Once you can kind of envision, like, okay, I understand what's going on here. We've got a bottoming pattern. We've got ratios that are all blown out to the downside. They're super cheap. Huge runways across the entire commodity complex. And interest rates and the cycles are going to drive the money from financial to hard assets. Now it's just a waiting game. And I think some people struggle with waiting. They struggle with not doing anything. They want to act like investing is like a job where you have to be doing something and clocking in and clocking out and building a part or whatever the heck it is. It's not like that. Investing is the exact opposite. You just don't even want to look at it sometimes. Just let it go. Shabam says Canadian crude inventories are still at a multi-year low as production growth moderates and ample egress capacity keeps tanks low. With further production now offline due to wildfires, expect heavy oil differentials to remain in a tight band throughout the summer months. Canadian observed onshore crude inventories below the cloud average. It's usually a 5-year cloud. Here's another one from Warren Buffett. So Warren Buffett's 3 most important words in investing. The 3 most important words in investing is margin of safety. I incorporate margin of safety in my investing. What I do is I use ratios to determine where this market value is. If the intrinsic value is here, or if the fair value of a sector in commodities normally trades, for example, a gold to oil ratio, 1 ounce gold, 15 barrels of oil. We want to buy it when you get this huge margin of safety where oil is really cheap. When you get into this buy zone, it's hard for people to buy because they want to be a part of the herd. It's like society and being accepted into society. So you have to buy when other people are telling you it's crappy. You want to buy when sentiment is bad. You want to buy when all the news articles are telling you that it's a crappy investment. Then that's it. You use the ratios as a way to objectively see if something is cheap or expensive. Then you look at the sentiment. Yep, it's garbage. Nobody wants to buy it. And that's when you load in. And that's when you have the largest margin of safety. And that's what you have to realize is that the margin of safety is the largest when the most amount of people hate it. Monday post, this is oil. It says you are here for 2025 at the low end of crude oil, including SPR, plus gasoline and distillate inventories. We're on the low end. We're not on the high end. Like 2020, we're way down. For dry bulk, we've got Capesize and Panamax that's flat, and the tankers are both down 3%, 1%, VLCC and Suezmax respectively. Grady, he says, been saying silver looks bullish here, and now silver's moving. Remember, all who were saying silver was about to drop here. It is vital to follow the right people. I'm not in the market to make these short-term market calls. I do use technical analysis to time my purchases. But the long-term guys, the potential to make so much money in the long term exists that I think people trying to time the short term is doing a disservice to those people. It's going to get you twisted around. You're going to sell out at the wrong time. It's going to go up on you, and you're going to struggle to get back in. The worst thing that you can do is lose a position in a gigantic bull market. That is the worst thing that can happen, in my opinion. And I am so afraid to lose my position by trading that I won't trade the position in the short term here. We've got everything that I look at on multiple time frames look good for gold, silver, platinum, all these different metals, commodities. This is the time to not be smart or try to be smart. It's going to be a dumb move, but to try to be smart and try to time the short-term market here. This is the time to accumulate these assets for the next decade plus and make many millions of dollars. This is like buying NVIDIA in 2008, 9, 10, and 11. That's what commodities are like. And people are wondering, oh, I can make $1 on NVIDIA when you had over 100 bagger from those prices. It just doesn't make sense. It doesn't make dollars either. So the way that I view this is that we're at the bottom of the cycle for commodities. Precious metals have broken out. That's our leader gold. We're in these bottoming patterns for a lot of different companies. In particular, there's two patterns that I see across the board. Double bottoms and inverted shoulder head shoulders. They exist across many different sectors, and all we have to do is load up and just sit in them. Sit in them, sit in them, sit in them. And then you're going to see your account go up and up and up and up, and you're going to have many multiple hundreds of percents, maybe even many multiple thousand of percents gains over this bull market. Some may even hit 50, 100x, maybe even more than 100 times your money. You can't do that short-term trading. And it's not going to be an easy hold. You're going to have to go through some 40, 50, 60% pullbacks along the way as these things move up in waves. And that's what you have to realize. That's the game. And you need to know how well you can time something and how well you can't, and how big the move is coming. You got to size the market moves up. And these moves that are coming are going to be gigantic. Rock bottom entries. So here's silver miners breaking out. And we're gonna use, SILJ is going to be launching out of a pad. There's a launch pad that SILJ has developed. We're going to launch out of that at some point. But it's breaking out of short-term resistance here. Looks good. Another one from CEO, it says the majors are sitting. Okay, I already talked about that one, so we're going to end it there. So that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you'd like. That's all I've got for today. So we'll catch you next time. This is Finding Value.